Hey guys, this is Jonah with Forexrazor.com. Just wanted to give you a little bit of rundown of what went on today in the markets, what we're looking at, opportunity that we believe is out there. Taking a look at the U.S. yen. U.S. yen's a big factor in the markets right now with risk aversion taking over, and it's been that way for the last several months with market turmoil that we've seen. Bottom line here, guys, this thing's working out exactly as we talked about on Friday. After non-farm release, we saw upward movement on pound. We saw upward movement on euro. We saw upward movement on US yen. Now, a lot of people are probably thinking, well, we got really negative employment numbers. Why did we see upward momentum? Well, it's exactly what we've been talking about, guys. This move right here, building up into non-farm, we had sentiment trading down. Okay, guys, we're selling the rumor of negative news. So when the negative news hits the market, everybody goes, oh, well, yeah, it's bad numbers, but it's not earth-shattering. The world's not going to stop. Okay, so U.S. unemployment's not good. Everyone knows it. So the market starts rallying. It happens over and over again. You can check the last 3 or 4 months of non-farm. You see the same kind of reaction. And there's a reason for that, and that's people trading sentiment. So we talked about getting long on both euro, pound, yen, and the bottom line here is this was the philosophy behind it. Now today we saw a rally up to the 200 SMA. That's this white line right here on the hourly chart. We've bounced off of that 200 SMA and we've come back down. That SMA also coincides with the 50 fib as well here on this big move. See, this fib is from this level to this level because you never saw any significant retracement from this point, about 95.75, all the way down to the yearly lows right around 91.80. And we never saw any retracement of decent proportions in between this period. So that's where this fib's drawn. And you can see the 50 line cuts this thing off. You got a wick going up, tapping the 200 SMA, and then bouncing off. Now we've come back down to the 23.6 on the hourly fibs. Let's take a look here at our 15-minute fibs and see where we're at. We're seeing right on 50% retracement, and this is of that upward movement that we've seen since Friday. So we've retraced to 50% of our upward move from Friday, and this is where we're looking to buy. You see this trend line right here, guys? This is where we sent out a signal to buy. We're looking to hold this up to a test of the rehighs. We're probably going to shed some of this as we go, but ultimately I'd like to hold a little bit, even heading towards 9,500. Don't know if we're going to be able to break the 200 SMA or not, but I think it's worth holding a little bit to try. Let's take a quick look at the Euro USD, and we'll see the same upward pressure we talked about. Now this is Euro on hourly. You can see that we've gotten quite a bit of upward momentum. Here's non-farm right here at the bottom. And you see since then we've had quite a bit of upward momentum. And that momentum should continue. We've still yet to see any decent retracement on Euro USD, and I don't anticipate to see any decent retracement until probably another day or two. Looking at 15-minute, we see we're right at the top of the channel. In fact, we just got done tapping new highs up here. And what we're looking at is for this thing to go long. But you don't want to grab it right at the top. You probably want to wait for a pullback. So I would not recommend longing Euro USD at current levels. We talked about getting long at 28.65 to 55 earlier this morning. That was a great level to pull shorts, to pull longs in. Worked out beautifully. We also want to look at pound USD, which is the same pattern that we're seeing on Euro USD. However, we've gotten a good bit of retracement on this pair and got a nice entry right at the bottom to hold this thing long. Now recap here, you can see that we've got the same upward momentum since non-farm on Friday. But the difference with this pair is that when we hit the 200 SMA on the hourly chart, we bounce down hard. And we bounce down all the way down to about a 50% fib retracement, which we can see on our 15-minute chart over here. You can see that we took down all the way down. Here's our 50 fib. Didn't quite get there. Our 50 fib actually would have hit us right around 47.78, somewhere in there, and we actually got to the low 80s, okay, 84, 85 on pound. So what we did here was we went long from 48.10. We closed out a half of that at 49.30 to lock in 120 pips on half. We're holding the other half for a test of the highs. And again, if we break highs, we'll look to hold maybe all the way up to 52 or so. But that's the bottom line, guys, is that I think we'll see some upward movement. Use these pullbacks as an opportunity to get long. Don't let them fake you out and let you think the market's reversing. We have seen downward pressure in the markets for the last week and a half or 2 weeks. It is time for us to get some pullback and some reversal. And I think that since we got non-farm out of the way, now's the time to rally. All right, guys, that's it for December 8th. We'll see you here tomorrow. Thanks for watching.